Well, it's a jam-packed week. We have US earnings season upon us, and the banks on Friday night shot the lights out, while US economic data continues to roll through, and Fed speak is pointing to a likely May rate hike from the US Federal Reserve. So we're going to home in on the currency landscape today, and for that, Duncan Cooper from ACY Securities joins me now. Duncan, great to see you there. Just to set the scene before we get into the charts, perhaps, it's obviously a very significant week. We're all looking towards some of this economic data, both locally and abroad, to try and get a bit of a sense on where the currency markets could head from here. What are your thoughts?
Well, obviously, the market is very much driven by fundamentals at the moment. Last week from the US, we had softer CPI data, softer PPI data on Thursday, and then on Friday we had stronger consumer sentiment figures. So we had the US dollar selling off through the week and then a bit of a reversal on Friday. So it is very interesting at the moment. It's exciting times. Is the US dollar weakness going to continue, or are we going to have a little bit of a reversal? So why don't we get into the charts and have a look?
Absolutely, Duncan. Well, let's go straight into the US dollar, because you and I have been talking pretty extensively recently about where the dollar could go to from here. And well, we're coming up to a fairly key level of support, actually bounced off it on Friday night. But what are you seeing here on the charts? What should we be looking out for?
Well, what I've done here is drawn in a range. It's the weekly range. We have a broad range here, and of course we were selling off last week with softer US data. And then stronger data came in on Friday, and we have an outside reversal to the upside at the key level there at 100.82. Now the question will be through the week, is that just a one-day bounce, or are we going to see a longer-term reversal back up the range? So I don't know. I'm a little bit on the fence at the moment. Are we in a range? Are we going to trade back up to the top of the range? Of course, we don't have a FOMC statement until next month. So the market's probably looking to that data. Are we going to get a rate rise? If we are, maybe that will give some support there for the US dollar, but just need to see a few more candles come in there on the chart. Can we hold at support? If we can, maybe we are going to be moving back up to the top of the range.
And then I would imagine too, if we break below that level at around 100.82, then that opens up further downside potentially?
Potentially, yes. I mean, some pairs have been really selling off. For example, the dollar franc has really broken through its weekly levels of support, whereas some other pairs that we'll get into today are holding at their levels of support or resistance. So it's going to be interesting if we break. I mean, that obviously there is this current year's low. So are we going to find some support there in the short term? I mean, maybe we'll just get 1 or 2 weeks up, or even just a week up. But yeah, if we do break, let's call it the 100 level, we may well see a much more significant decline on the US dollar.
Okay, well, let's look at what's, well, like you said before, driving in many ways the US dollar story. And we're going to look at the 2-year yield. Obviously, interest rate sensitive gives us a sense on expectations for Fed policy. What do you see here when it comes to the 2-year yield?
Well, when we look at the 2-year yields in contrast to the US dollar, there's a bit of a divergence here. We've been putting in a bit of a base pattern. We can start to see that we've put in a higher bottom to a higher top. So yields are starting to rise again, especially on the 2-year yield here. So maybe the market's expecting that the Fed's going to be raising interest rates still, and maybe their expectation is to further raise rates maybe. So we had a little bit of a divergent position with yields are starting to rise, US dollar's been declining, but maybe with this rising, that bottom may come in there at the bottom of the range on the US dollar. We'll have to wait and see. So it's worth watching both. Of course, if yields keep rising, we'll have to have the expectation that the US dollar will probably have a rally.
Yeah, absolutely. Those rate expectations always important in the currency landscape, as any other financial asset, I suppose. But let's move to the biggest, I suppose, weighted currency pair in the US dollar index, and that's the Euro USD. Naturally, it's a little bit of an inverse dollar index in many ways because of that, but it has its own factors to trade on and own levels that we have to watch. Well, what are you seeing here when it comes to the Euro USD?
Of course, the Euro USD is at least 50% makeup of the dollar index, and as you said, it's an inverse look, outside reversal candle. Now, I was expecting maybe we were going to break above and through We had a nice close above on Thursday, the yearly high, but then of course we've sold off. So the key level to watch as we start the week is 109.73. We traded down to that level on Friday, and can that level be support into Monday, Tuesday, or are we going to break below? If we break below, I think traders should have the expectation then that maybe we're going to start to drift down. And again, are we going to drift down the range through the course of the week, through the course of the current month? So 109.73 is the key level to watch for, certainly intraday traders this week. If that holds, then we may well get a re-challenge of the 110.33, the yearly high at the moment, and can we move above? So big question mark there. That's why I put it on the chart. I'm a technical trader. I don't buy into resistance. I'm usually selling at resistance and buying at support. So for me, I'm watching for a reversal. We'll just have to wait and see.
Absolutely, and we wait and see and we position accordingly. So there's a few tips there just to how you can set yourself up. But another pair which is actually quite interesting and very much an interest rate story, especially given the Bank of England's hawkish bias at the moment, and some data that's coming out a little bit strong. The cable GBP USD, another one that's you've got a question mark here. So what are we questioning?
Well, again, are we going to be able to hold above the yearly high? We had a very nasty candle on Friday, as you were saying. From the UK perspective, they're kind of hawkish on interest rates at the moment, I'm guessing, with inflation still rising, but a very significant reversal candle there at the yearly high. So the bulls, the buyers here on the cable, can they hold and push through 124.48? So certainly today, Monday's trading, traders will be keenly watching 124.48, the high of the year. Is that going to be intraday resistance for a move down in the short term? And if we can break 123.44, if we get some downside movement, we actually will change the trend there on the day chart. So, as I said at the start of our conversation today, a lot of pairs versus the US dollar at resistance at the moment. Are they going to hold to move back down? Or are we going to finally see a breakout? So watching 124.48 at the moment. Is that going to hold as resistance for a move down in the short term?
Okay, so we'll keep an eye out on that inflection point, really, because there's two very key levels to watch here that could determine that direction of that key pair. Let's bring it back home now, I suppose you could say. The Aussie dollar USD, one that's getting caught in a number of crosswinds and narratives. We've been talking about the interest rate story and the dollar played there as well, but we've got China locally here. We've got our own interest rate story when it comes to the RBA. Again, another one where we're watching a fairly key level here. Why don't you take us through that key level to watch and I suppose your own bias in terms of which way it could go?
Sure, of course. At the moment, the big question is the RBA going to continue raising rates or not? We're obviously in pause this month, and we're getting very range bound here between approximately the 66 level and the 68 level. On Thursday we had good job figures and we popped up to retest that 67.93 resistance level. I'm just expecting we will come back down to the bottom of the range there at 66.29, and that will be the inflection point. Are we going to hold there to move back up? So at the moment it is in a range. I think traders should trade it like a range. If we come down to 66.29 and we start to see a hold once more, have the anticipation that we could be moving back up to 68. But if traders go to the higher time frame charts, the weekly trend, for example, is definitely down. So we're just trading in a 200 pip range here at the moment, waiting for an overall stimulus just to say, okay, should we be breaking to the high side or the downside? So it's good trading at the moment on the Aussie. If you just trade the outside, buying at support, trading down from resistance, there's 200 pips there to try to profit from.
Yeah, with that as out, and it is very range bound. We'll see whether there can be some kind of direction established anytime soon. But for the time being, like you said, trade the range, respect the levels. But last but not least, let's get a little loony, shall we? And look at the loony. One that's oil proxy, obviously interest rate differentials. We had the Bank of Canada last week keeping rates steady at 4.5%. So all these different factors playing into the pair. We're looking at a sort of upward sloping trend line support, I guess you could say. I mean, what are we looking at here when it comes to the charts?
Well, I'm just looking at the fact that we're coming back down to a line of support. I was expecting maybe last week we could put in a higher bottom. we had the week before 4 days up, and then the first negative day was, I think it was, I'm just counting the candles back here, it was last Monday where I had the first negative day, and I was expecting maybe a higher bottom can come in there, but of course with the softer data coming out from the US, we've traded back down to range. But as you say, with interest rates, the Bank of Canada has now paused interest rates for 2 months in a row. This coming Tuesday, tomorrow, we've got CPI data coming out, so that's going to give us a little bit of a look about whether inflation is declining. And yeah, with the overall interest rate differential, if the US is still raising and Canada is pausing on their interest rates, then maybe support will come in here on the line of support for a move back up. So over the next couple of days, do we start to get a bottoming process coming in here? I mean, we could come down and test the current year's low there at 132.62, but just starting to put a bit of a reversal in there on a line of support. So it's well worth watching. We could see a nice move back up towards the 137.05 level if we can start to see a bottom coming in there on the loonie.